Financial analyst Keith Springer once again on the Red Couch. Good morning, Keith.
Good morning.
Let me see. Now I don't know if we can grab the big board here, but we were expecting the Dow to open up a little bit this morning,
we were. Futures were up about 40 or 50 points. I think we are up about 40 or 50, mostly from jobless claims.
Okay.
Jobless numbers, the first-time jobless claims weren't as high as expected. So
about 35.
Yeah, 35 right now. So we've got to see liquidity keeping this market up. No reason to sell. No place else to go with money. If you've got money in the bank, you can't sit there and earn 0.2%. You've got to invest it in something other than bank or CDs, because you got to beat inflation and taxes, and that's why investors need to find places that are right for them with the right amount of risk, but in proper investments.
Tomorrow we're going to get jobless numbers. That's important for politics, and it's just important for the market, right?
Yep, that's very important. Tomorrow's the big number for economics, where everybody wants to see jobless rate. It's expected to go from 8.1 unemployment to 8.2, which is big. It could hurt Obama in the long run. And the economy, everybody knows the economy is slowing down. That's why the Fed came in with QE3 last week. Nobody thinks they're injecting $1 trillion because things are good. You don't throw money at the economy because things are good, right? So
we're going to ask about financial guys and the way you look at the debate.
Right, with the presidential debate last night, do investors react?
They do. It's funny because I mentioned this yesterday, that investors like to think that they do better than Republicans. Everybody wants to pay lower taxes. Typically, the capital gains rate and the dividend rate are what's on the table. Obama wants to raise that. Romney will keep that low. Right now it's 15%, which is very, very positive for the market. So there is a big positive aspect to Romney. If Romney wins, supposedly he'll keep the tax rates on dividends and interest, capital gains low, which should help the market absolutely. Obama's got another side of this, though, because he's a supporter of government intervention, the quantitative easing, and if Obama doesn't win, Romney has said he won't do that. That kind of keeps the floor into the market. So if you do see Romney win, there's a lot of people that think that the market actually could crash, because you don't have that, what they call the Bernanke put. That's when Bernanke steps in to keep the market at 12,000 or 11,000 or 10,000
by managing,
and injects money. Right, so he doesn't. Right, so he does that.
Real quick before we run, this isn't a quick question. We'll talk about it next time.
Okay.
What makes me crazy is that there are large corporations that give huge amounts of money to both candidates.
Yep.
Which just makes me a very jaded person as to why they'd give them the money, but that's a conversation for
another day. They're just buying influence. I think we all know the answer to that one.
It was a short answer.
Yeah.
Buying influence.
Buying influence.
Frustrating. Thanks very much.
My pleasure. Happy to be here.
Just validating, I think, what we all really believe deep down inside. 648. If you have any questions for Keith Springer, you can send your money. Send your money.
Yeah, send him your money.
Send your money to fox40.com.
He takes checks.
Call me first.
Send your email to money@fox40.com. You can call him directly at 925-8900. We have his website linked to the Go button and to Paul's picks at our website, fox40.com.
And here's Sheldon Orvis in the Atlantis Reno Traffic Center.
And we're looking